Greetings, happy trading, everybody. I'm Scott. He's Alan. We're the Waves of Profit.com. There's a little subscribe button in the bottom right. Click it before you forget. Don't miss any of these exciting, very short testimonials. We are just showing you that it is possible more than once in a day to make 10% in 10 minutes. In fact, we've been going way over that in the last couple exciting episodes. But the purpose of this is to show you, yes, it can be done. And if you can go back on our YouTube channel, you can go back months and months and months and months and months. The software itself comes with the replay function so that you can practice and you can go back years and do your practice. You need to practice this. You need to have your rules and everything, your guidelines all set out. You need to be able to do this like second nature, get in, get out. The whole system is rigged against you. But if you just follow along and just take a little bit of cream, there's nothing they can do because the market has to move one way or the other. And if you get in at the right time, get out at the right time, you've made your money. You're one of the winners. Unlike the people that get in at the wrong time and get out at the wrong time. It's all about fear and greed. And the greed is thinking, I made my 10%, I want to go for 20%. And the fear, of course, is that I've lost 5%. I'm going to hang in there and hopefully it'll come back. Please come back. Please come back. Now I've lost 10%. Now I've lost 30%. So you need to fight those two emotions and you need to get them on side so that they work with you. And that's what our training's about. There are links below for our courses if you want to try them out, if you want to try the program out, www.wavesofprofit. And now we're going to be looking at June 3rd, 2015. Alan, tell me, there's no way anyone could make any money today, right? This is one of those days?
Nope. You know, 150 years ago was tough to make money in the markets. And the market has been open that long. But, you know, we're using rules and principles that are well tested, that we've got data going back at least 6 years now. So, you know, you don't have to use how you feel or, you know, all that other kind of stuff. You know, the octopus in the tank that predicts soccer games. Well, if you don't happen to have one of those octopuses working for you on your stock trading, maybe just some math and indicators. Actually, one of the coaches came to me yesterday with a comment that's from a student that said, it's too easy. I don't have to do a lot of thinking. And it's like, well, you can make it more complicated if you want, but yeah, it's pretty simple. You just have to put a little bit of time in. So let's look at this first trade here, Amazon, and I'll just use the little magic marker here. So it says, yeah, green's good, volume's good. It's generally green, but it's a little bit mixed, but it's a good market. So a little bit pink, a little bit green. It's not strong either way. So if the stock is strong, that there's some life to it, then that'd be great. Now, one of the things is that this particular stock gapped up. So it may act a little bit weird. And we do say that gap strategies you got to be a little bit different with. But so we're going to walk through it. So I already hit the buy on the call side. And let's go forward 1 minute. So I'm looking for it. It broke a new high here within that 1 minute. So another minute. It hasn't done anything yet. I'm at 9:45. But the market, whoa, it just jumped up. Now 9:45 is a turn point quite often for stocks or a continuation. In this case, you know, the market, as you can see with this line here, was heading up and up, and this guy was lagging. See how cool that is? It's like the market's running up, and this guy was still down here, head to head. This is why I liked it. And then it caught up to the market quite nicely. Do I need more than 10%? No. Happy to take it? Yeah, thank you. And that's it. That's your trading. So let's go look at another stock here. Now, we're going to look at a red stock just because this is just, you know, we're here to learn things and play with things. So let's go move forward here on this stock to where I thought maybe the market was turning red or the stock was. See, the market's gone weak. It's flattened out here on this blue line. So it's like, well, okay, so the market is just below where it opened for the day. So it ran red, then it ran green. So here at this time, I hit the buy on the put because it hovering and just broke the 945 range. So we hit the buy because this one looks good. The volume's not quite there, but lately this stock has been liking red. Let's just throw a chart here for you. Let's get the 60-minute one right here. So yesterday, the thing ran red pretty well. Right now we've got low volume, but you can see how it's been in this range. It's what Murray likes to say, you know, clear to the left. So in his thinking, I know I'm giving you actually more training than you pay for here at YouTube. So, you know, that's the resistance area that, you know, it can probably run all the way down there. Now, we don't care to make all that kind of money, and we're not interested in predicting and hoping. We're looking at, well, I got my usual indicators happening here. I broke the risk zone below previous low, lower low on the 945. Let's go forward. We bought it 1 minute, 1 minute 7. It's okay, 2 minutes, 11%. That's enough. And yeah, I think this thing could probably keep going, except that the basket likes the right now the green side. It's a new indicator we added, that the market is liking green right now. So I'm backing up. So at the point we got out, it's kind of mixed, but the market is liking green. So it's safer just to leave. That's all. Just safer. We could have made more money. Yeah, whatever. I got my 10%. I'm happy. So we're going to look at one more trade here. And this is Baidu. Now remember, the market's now it's a little later than what we just looked at. It's now 9:55. So I got about 5 or 7 minutes before the market might turn, because it turns sometimes at 10 o'clock as well. So I bought the call because this side looks good and it fit the rules. If I back up a minute, you see it was here and then it's here. Now here's the thinking is, if, let's get the drawing rules here. This thing might bounce off of the high. It's really close to the high. It's not at the previous high, but it's pretty close. So if it bounces and goes this way, I'll just take a small loss. If I wait for it to cross this side, in this particular case, which is a weak market that's slightly red, I would take a bigger loss. So getting in on this side is a little bit healthier. It gives me a little bit of a cushion. So I bought the call. Going forward, yeah, it bounced down, it resisted, but the market's getting a little bit on the green side. So it's coming back. It's still moving higher. Now it's coming back. This is the point where I'd think about getting out of my trade at break even. I'm getting closer to 10 o'clock, and it had a little bit of resistance off of that high. So I'd be thinking about getting out. But right there in 1 minute, right, from this to there, I made my 10%. So I'm happy. And you'd see this climbing and running this way. I see so many people, one of the biggest mistakes they make is, well, it could do more. No, it showed you that it was a bad trade. And we have mentioned this before. Whenever I have what I call a bad trade, where it breaks down to the bottom and comes, and I don't know whether it's going to keep going up or not, I'll get out of it at break even. But in this case, it just said, hey, here we go, we're running. So I got paid extra and I got out. Now I'm going to look at another strategy, and you can see, yeah, it then ran, it ran away. So getting my 10% was a bonus. I was happy to get like 0 or 2% or something, but I got lucky, and that does happen. So here we go. I want to look at one other trade because this is an interesting one to watch. I'm going to back up in time a little bit to 9:40 so that nobody gets to see what it looks like before it happens. So here's AMBA. Now this fits our normal rules, like breaking out, higher highs, everything's looking good, you're above a previous high. What's wrong with this stock is that it gapped above $95. Now it wasn't much of a gap, but it did gap. So let's look at this thing here. This is where it was yesterday. Is it closed down here at, oh, I'm sorry, $92. So this is a gapping strategy, and we'll show you these occasionally, but you'll notice it's clear to the left, meaning that it looks like it's just going to keep going if everything else looks good. right now, and this is why gapping strategies, you got to think about them differently. Right now, I've got a bit of strength on the market to go to the red side, but this stock doesn't care. It's going off like crazy. So I'm going to hit the buy now here, and we'll just see how this goes on. But remember, gaps can be a wild ride. So here's 1 minute, 8% loss, 9%. Now we're 1% profit. The market's now starting to turn green. Another minute, -3, +2, -2, -28. Yes, this is what happens with gaps. It is a wild ride. However, let's just see what else happens with this thing. You'll notice that it's off of a previous high. The previous high was over here. So this is where you have to include all that kind of thinking. It stayed above the previous high. That was yesterday's high. Remember the other day it ran down and then it ran up. So then it's starting to run up. You're at break even, you can get out. Or if you're a real true diehard gap strategy player, you're going to go, okay, now it's paycheck time. This is where you know life's looking good. You're breaking at RB. It's you got a K-band tint. The market's kind of neutral. You still have strong volume. Remember, it gapped up pretty big. So this is where, as a gap strategy guy, you're thinking differently than all this stuff we've been showing you for 10%ers. It's a different game, and we'll show you some more of these over time. 50% is my max. I'm just going to say thanks and leave. But I wanted you to show you this occasionally. It's not the bread and butter strategy we start you out with, because yeah, you get these wild rides. You need to know how to handle them. Like how much loss is a different game than how much loss we take in the 10% rules. 10% maximum we take is a 10% loss. And then we said, okay, that was one of the ones that didn't turn out. Most of them turn out, but that one didn't. So that's fine, that's part of it. But it's a gap, and it was a big gap. It was up $3 on a $90 stock. That's quite a bit. And you can see that from the chart here. This is the multi-day chart, is that, you know, the stock yesterday opened here and then went up there. So that's it for today. I'm going to just do the review of what we got into. We did get into a few trades. So we started out with AMBA, and let's get rid of that. That was the gapping strategy. It's the last one we just showed you. But the first one we looked at was Amazon, and we made 24% in 3 minutes. And here's another one that we made in the other direction that was 2 minutes, 11%. And then here was a more standard move, which was 10% in 5 minutes. And this was the gap strategy, which is a little bit of a, you know, roller coaster, but you can make some really big profits. So that's it for this particular day.
Awesome, Alan. That was pretty amazing stuff that you showed as usual. Thank you for joining us, everybody. We're here to support you in successful trading. Our goal is 10% in 10 minutes. I think, as you can see, those are realistic, if not actually very conservative goals. This has been June 3rd, 2015. You can go back and look at the stats yourself and see what it's like. If you're interested in knowing more and not missing any of our shows, hit the subscribe button, bottom left-hand corner there. Get into the descriptions. We've got some coupon codes for 3 of the courses that we have ongoing right now. If you want to know more, www.wavesofprofit.com is where it all happens. Thanks for joining us. See you next time. Bye-bye.